Hi, it's John Cunningham and Matt Nicastri from Cunningham's with this month's Market Minutes. We're going to talk about the post-election market, Matt. We've seen some interesting things happen over the last 6 weeks when the election was announced, and we knew that usually there's always a tightening of the market. We saw it happen, but out of those 32 sales that we did in May, half of them were after the election was over.
Yeah.
Interesting outcome.
Yeah.
So how's the market feeling about it?
Yeah, I mean, we're still certainly seeing a lot of underlying demand, which tells us that, you know, there's a bit of fear in place in the market, but usually what we see after an election is a period of stability, and the market is, you know, one of the biggest factors in the market is confidence, and I think stability is a good thing whichever way the election goes.
Yeah, it's interesting, isn't it? It's like we had this hesitancy that exists, but now that it's known, there's moved from the unknown to, yeah, exactly. So, what are the trends you're seeing in the marketplace now? What's the key indicators looking forward?
Yeah, so we're seeing a lot of investors return back into the market after a little bit of a hiatus. And we're also noticing the upper end of the market is performing exceptionally well. So that tells us that the smart money is still buying, and those that have had experience in a rising interest rate environment are not too worried about the blip that it might end up being. We're seeing buyers factoring in interest rate rises in the future, which I think is absolutely prudent. And they're just, they're already pricing that into their decision-making process. So that's probably why we've seen, a minor correction in the market, and a correction that probably needed to take place.
Well, yeah, we were almost at a false market before, weren't we? That we've just gone too far. That correction's taken place. The media's still catching up with it, but it pretty much happened last year and into this year. And now we're starting to see people get that confidence back, that sellers are starting to understand that they have to price their market in today's value, not yesterday's value. And buyers are now seeing that, well, maybe they've actually waited for the bottom to occur, and now here we are. So what does that tell you for the future?
Yeah, I think buyers that are waiting for the bottom of the market, they're always going to be disappointed because it's never going to coincide with exactly the property that they love. And so I think that's definitely a trend, moving forward.
So therefore it tells us that stability is probably the key right now for the next maybe 12 months to 2 years, based on history, telling us that this is the time now to buy.
Yeah, and it's really interesting because we're seeing buyers now that, dipped their toe in the water last year, found, it's a little bit too hot. They're now re-entering the market, and we're also seeing a number of new buyers that now perceive the market as good value. So usually when we see that as the tipping point for a period of stability moving forward. So I think we can definitely say that that's the case.
Well, thanks, Matt. Really appreciate your insights into that. And stay tuned for next month's Market Minutes as we keep you up to date with what's going on in the real world.